Morning and welcome to the pre-market live stream. We have the key levels to watch here for Nifty 50 from an intraday perspective, but also we're going to look at a macro higher time frame perspective. These things are still heading much lower. I got the key levels to watch and the potential downside targets that we could still be heading toward over the next several weeks. We're going to look at several markets here, and also we'll take your requests as they come in. But let's go ahead and get started here. Moving over right now, we'll get started with the Gift Nifty 50 futures right here. And the initial opening move right now in the opening minute is to the downside. So downside move right now for Nifty as this market gaps down and starts a little lower at the moment. Again, 1 minute in here, we're not going to make too much about it just yet, but an initial gap to the downside. One thing you'll notice here about the Gift Nifty here, very aggressive selling pressure over the last several weeks throughout the month of March, really. And it came after this compression event right here. That compression event followed this extreme event here. That was an extreme 3-day widening of the range. I mentioned when you get a widening of the range like that, you tend to get compression. After the compression, you'll tend to see that big expansion, and we've seen it now. So it's played out almost textbook. It has played out textbook, and it really hasn't let up just yet. So there's still more downside on the horizon. We continue to see geopolitical pressures here seeping their way into energy leading to inflation fears and all kinds of things. So the overall macro pressures are still there. And right now, the downtrending market is in effect here for the Gift Nifty. One level here that I wanted to show, this is a 12-month or a 1-year pivot. So for the PivotBoss pivots, and we'll drop into the intraday here as well for some of these markets. But one thing I wanted to note here, these are the yearly pivots, the yearly PivotBoss pivots. And it shows the previous year's high, previous year's close. Both of those have been rejected on the tests early this year. Once you reject the high close, when they're close to each other, the next level to go test is the midpoint. This is your midpoint right there. It tested it. It eventually broke through the midpoint. Once you break the midpoint of a previous range, you open up the previous low. The previous low is in play. The previous low comes into play at 21,800, and we just reached the 22,800 level. If I bring this up right here, that was our key range, and we mentioned before 22,790.5 was our target, and here we are. We're there. So that was our key range target. If we take that off right here, we still have a downside target coming in now at 21.8 as the previous year's low price. So what this means right now, and the reason I'm covering this for you all, because this is all about structure. It's all about understanding which direction the market is heading, what is the current trend, what's the volatility profile of the market, and where are the best opportunities for trade. And when you are in a downward price discovery phase, any pullback, as I accidentally click off the chart there, any pullback becomes a buying opportunity in the downtrend. And that's what we talked about last week. So when we did our last pre-market live stream here, that day was the up day, and I said, even if we rally, look what's happened last time. We'll get the trap here. Late bulls are trapped, and you see the flush. And last week we saw the same thing there. Monday, Tuesday up, trap and flush Wednesday through Friday. We've seen it throughout. So that could be a very similar plan of attack this time around. If, and this is a big if, watch the previous week's low. If this thing recovers the previous week's low, there could be a quiet recovery to the upside. That's a day trade or a scalp opportunity, but it's any late bulls could get trapped, and that's the opportunity to sell for the next rotation to the downside. This market continues to be working its way downward, and the current trend is likely going to take us to the previous year's low. That's 21,800. So that's the zone right there to watch for Gift Nifty up ahead. From a trending perspective, this thing is clearly downward trending. And now, if we bring up Nifty 50. Let's take a look at the Nifty 50 here. And I also want to bring this up with, by the way, good morning. Good to see you all today. Welcome. Thank you for starting your morning with me here today. Right now, I want to bring over the trending bands for this one as well. We're sloping downward with our year-to-date VWAP. R3 and S3 are also sloping down. That tells you a downward price discovery phase. We clearly see that phase now. What this does is it tells you not to fade this weakness until you see significant rejection or reaction. And right now, any pullback could still be a selling opportunity. At the moment, we are just off of our 800 target, so 22,800 is the downside target from that key range. So we're still working our way to that target. It's for all intents and purposes very, very close to reaching that likely this week. And the next level down, though, again, as we look at our yearly pivots here, is this level right here. And again, 21,747, we can call it, or 2160. 21,760. This is the similar level to the gift Nifty 50, right? So it's around that 21.8 zone, 21.7 zone. So we're still working our way down toward that target, just like this gift Nifty 50 here is there. In the same way right now, the Nifty 50 is also working its way down to that target here. So we have some tremendous downward continuation that could be still ahead. So that means while we could see some impressive rejections like this day here that took us higher, that's very short term. Don't fall in love with the upside right now, as it could be a trap for the next rotation back down. So keep that in mind. Now, let's talk some intraday levels real quickly here. One of the intraday levels I wanted to show here for the gift Nifty is look at the chart over the last, actually, let's look at a 15-minute right here. And what we'll do is do this here. This is a 15-minute chart of last week's range. You can look at this on a 60-minute time frame as well, but your support is clearly down here. That's around the 22,950 zone. The previous week's low is going to be right here when we start trade here pretty soon. That's going to be a very important level to watch early on. But look at this low part of the range here. We can squish it up a little bit more like this, for example. Then you have this part of the range here. So you have this box and this box below the 23,345s, okay? Then you look up to this high, and you have this high that comes in at around the 855 zone, those series of highs, these series of lows, and then you have these shorter term resistance levels. So that's your market structure right there, basically. Very clean market structure at the moment, just from a near-term perspective. You push through that 345, 350 zone, and it opens up a short-term rotation again back toward 700 or maybe a bit above. But even if it does reach these highs, it's another opportunity to turn it back within the range. Additionally, any break outside this range in either direction, either up or down, leads to an equidistant move. That move could easily be, call it 900 on this end, 400 on this end. That's a 500-point span. So whenever you do break out, say through 400 here, 500 points up, takes you to 900, or call it 500 points down from 9, and you're looking at, 22.4. 1, 2, 3, 4, 5 right here. So you're looking at a big time continuation once we're outside of this range. Those are the levels to watch. And you can plainly, you can call it 350, but 400 is an easy level, and 900. Those are the major levels early on for this week here. And that could provide some really good intraday and short-term directional moves right there within the range. Okay, now backing out a little bit, I did want to talk some Bank Nifty levels here. Let's go Bank Nifty. And I wanted to show this again in the downtrending mode. It's been highly aggressive to the downside. Let's bring this up and make this more trending. And we're kind of in the bearish mode right now. We can also make these quarterly as well. And so what that does is it shows the more recent price action. And you can see it had a downside break through the S3 already, and really demonstrating the downward price discovery below S3. One signal there on the breakdown, and you're just crushing to the downside here in that mode. And you tend to go in that mode until you find rejection. And where do you find rejection? Well, we're currently already below the previous quarter's low right now. I mentioned last week this was a great trap zone, and there was a short-term trap and then back down, so this doesn't look good now from a longer-term perspective. If we make this again 1 year, is Bank Nifty headed all the way back to 47.7? 47.7. Now, again, with the yearly pivots here, and by the way, we'll be coming into Q2 here pretty soon. We got another week or so of March, and then we'll go into Q2 with April. I'd love to do a Q2 market outlook and do a kind of a longer format market outlook for you all and do something for the quarter. So we're going to be doing that for both the U.S. and India markets as well. So you feel free to join both. I'll give you more details about that in the week ahead. All right, now looking at this one here with the downside continuation, this level now, the most important level right now becomes, and still is, the 54,000 level. That's the level we've talked about in Bank Nifty, 54,000. It's your previous year's midpoint as well. So if you trap above the previous year's high and fail at the close, you head back to the mid. If you fail at the mid, you open up the low. If it's somehow able to hold that mid, then we can return and bounce it back, say, within this 4,000 point structure, which is 58 to 54. We just came from 62 to 58 down. So that's one distribution, two distributions. You tend to go three. In a high volatility market, you tend to go three. That puts you to 50 at the very least up ahead. So this week, any strength could still be a selling opportunity for a continuation down. If this really gives up 54 in a meaningful way, because right now it's below it a little bit, but it hasn't really transitioned through the level. Like this was a major transition through 58 that got us through. A transition gets us to 50 with a shot to dropping us into that 47.7 ahead. Now, looking at the lower time frame as well, let's look at this here. This is a great lower time frame chart right now. It looks very similar to the Nifty 50. Oh, thank you very much. You love the pre-market analysis. Thanks for your time. I appreciate you as well for joining me for this time as well. It's been a lot of fun, a lot of good positive feedback, and I always love talking markets and charts, so this is great. Now, right at this zone right here, that's your 55.5. Very important level there. 53, 250 on the lower end, and then the 54.5, right in that zone. So you have that similar structure that we were just talking about for Nifty 50 in the lower time frame. That's kind of your zone right now. The early level to watch this week as markets begin. And let's go back to Gift Nifty real quickly here, and then I'll get to that point. So there it is. This is what I was thinking. So here's your previous week's low right there. And we got the initial gap down in the first minute as we were seeing, and we've slowly started to fill it back up. This is very similar to kind of what we saw last week here, where you had a very similar attack at the level, and then you rode it higher a bit, and eventually went all the way to the previous week's midpoint, and then it collapsed late in the week. But this is the similar start here that we're seeing at this edge. We go back to the week before that. It gapped way down and still filled in. We go back to the week before that. This one looks like it dropped right out of the gate on that one. So this market has been quite bearish, either starting with gaps or in this case, let's see right here, rejecting on the way down initially, but then partially rallying or filling the gap or whatever gap there might be for a rotation back down the next part of the week. So early part of the week could be a little bit up. After this, it could be right back down. And we've seen those rhythms, time and time again over the last several weeks, because that's what a downtrend is, right? This is a downtrend. A downtrend is up early, down late. Up early, down late. Up early, down late. So this week could be an up early, down late again. And now if we go back to Bank Nifty here and just tie this back to this chart right here, if it's up early, watch that 54.4 zone, because that could be the trap back down. If it pushes through the level, now you're opening up to the 55.5, and then this is your trap back down. 2 spots to watch up ahead, and to begin the day, keep an eye on that 250. That could be the move that takes us from 53.250 to 54.250. So it could be here, back up, until you're able to get out of that range. So that's the intraday range right there for Bank Nifty. Good stuff there. Really, really like the structure that we've seen out of these markets here lately, but it's been highly, highly bearish, as we've said. Look at this downtrend. And this brings up another point as well. When you get into a very aggressive trending market like this, you really have to respect the volatility as well, because especially selling markets or bearish trending markets, you can really get trapped very quickly. You have to mind your risk. The flow and price action is much faster than normal. And so you really either need to mind that risk in a big way, or cut back your size, or both. Really cherry pick your opportunities in those moments. And Coco here. Hey, Coco. He's trying to talk to me right now. And so that's what we're looking at right now, is a very aggressive, volatile market. And when you have a volatile market, it can swing. The volatility can swing in both directions. So you'll have aggressive down days, you'll have aggressive snapback days. And so there's opportunities intraday in both directions. But I will say, if you are long, just try not to be long overnight or hold too aggressively. Take what you get, take the profits, and then look to reload perhaps on the downside. So some thoughts right there for higher time frame structure. I did want to look at a few charts here. I want to look at Hindalco. And if you have any specific stock charts you'd like me to look at as well, or any tickers, please let me know, and I'd be happy to take a look right now. Good morning. Good to see you. Welcome. I wanted to look at Hindalco here because this one has been coiling up in a very, very well-defined range for a while. We talked about it down here and had it as a long candidate to the upside. If you can get above that 905 zone, it busted up and got a nice move higher. But it's stayed within the range ever since. It hasn't really made that expansive move. And on Friday, it got a big-time gap, drop, close lower, and the midpoint is at or below the previous high there. And I think that's your 3-month high. So this is this going to be a failure? I struggle sometimes on a big break like this, because everyone says, wow, or everyone looks at it and thinks this is a breakdown. It's a big breakdown, and it should continue downward, et cetera, et cetera. It can also be a massive trap in a highly bullish market, and when they finish it on a Friday like that. They finish it on a Friday, everyone's scared, and then they trap late sellers on the next Monday, and now you're trapping them and returning it higher. So, for example, if price were to close today above Friday's midpoint of 889, you'd likely get another squeeze right back to value at 935. We likely get something like this. That midpoint means everything this week, especially today or tomorrow, the next couple of days. If price pushes through this midpoint with some very bullish energy, it could open up a short-term squeeze back up, because that's what we've seen time and time again down here. It hasn't stayed down here long before snapping back. So I feel like this could be a bear trap. Late sellers could get trapped, especially early in the week, right? We're already seeing GIF Nifty take out the previous low and then start to fill back up. So I'm worried this might be a little bit of a trap. If we did see downside expansion, then it would be unable to rise above the 889, or call it 890. It'll be unable to get through there, and then we break down, and now we're working to the next major pivot below, which would be somewhere near 823. So those are some thoughts right there. Keep an eye on Hindalco. This one's been active, but mostly within the range, so I'm a little skeptical that it'll break down in this moment. Instead, it could be a trap back up, but keep an eye on 889. That's the one that's going to tell you everything. Let's see. Let's look at HDFC Bank. Been watching this one for a while, and I've been in. There's been some significant movement, obviously, that is usually good enough to lead to a nice reversal. You know, when you have so you're up here at value, or you're here at value, or wherever you want to call value here. There's multiple value levels there. And then you get a massive move away from value. There was enough of a move that a snapback could occur. But in this case, this is a drastically changing market right now. Global market. Energy is a big deal right now. Everything, so much, right? Putting pressure, inflation fears, putting pressure on the rupee and all this. That is not leading to the snapback you would normally see after such a stretch. What I mean by that, and I'm trying to make myself clear here, is when you're at value, say by VWAP, and then you stretch to S3, and you're 3 standard deviations below value, typically speaking, that's enough of a value opportunity to return price to value, and you see that return. In this case, it was not. It was a value trap. And now we're continuing lower again because we are in a downward price discovery. So when you get into that type of mode, I tend to be very risk off, and I do not try to be the hero and try to find and guess the low. It'll always kind of bounce back like this and trap, and then whoosh, trap and whoosh, trap and whoosh. So while we can rally a bit here to start the week, it could see another opportunity back down. This is just highly bearish until proven otherwise. And if you look at this one against the yearly pivots, look at this. We're already below last year's low. We're already below last year's low. And if this thing's going to get really bad for HDFC, then it's going to break. It'll be through the 760 level. This 760 level right there is where this thing can get really bad. Because between 760 and the previous year's low, that can still be a trap opportunity for a bounce. But there's nothing suggesting that right now. As a matter of fact, if you recall, when I started these live streams with you all, I talked about this large rounded top in these markets and how breaking here opens up the prior pivot low. We've already gotten there, and now it's well below it. This market is reeling. And do we see a continuation to 680 is something we've talked about before, as low as 680. So this is highly bearish at the moment. Any pullback could still be a selling opportunity until proven otherwise. And if it breaks 760, look out below. Quite a bit more downside could be ahead. Let's see. Another one here. Coalindia. Oh, Coal India. I'm over here trying to say the whole one word. I'm learning. Let's go. So Coal India right here. Ooh, interesting. What's interesting here again is looking at our bands. These are yearly bands, and you have a relatively flat bands, now slightly rising, and then you had your bands normalized here, and now they've pinched inwards this way. So a pinching relationship can tend to be an expansion or energy building phase for expansion. to, just looking in general here. Okay. I'll keep an eye on this one. Right now, it's a bullish signs at the moment, but also coming into some higher resistance. Things are pinching, which in this case and on this bar and the way it looks, it needs to start going higher, and then you'll start to see R3 come to provide support. That's how you know your price discovery. If it can't do that, then say failing back through 55 and you're back down within the range, and now you have kind of an expanding range that happens. So oftentimes if you have an expanding range that's developing here, on this end is where rejection can occur, and you can come back at least to value, say between VWAP and VPOC, and maybe across the range. But right now everything's pointing up, but not as strong as you'd like to see out of this pattern. So I'm going to keep an eye on that one right there. Let's see what else we have. Reliance. Oh, M&M. Oh, M&M weekly CPR is narrow on that one. Yeah, those can tend to be energy building phases there as well for a nice breakout move when you have that narrow CPR. Reliance. So Reliance I have as an energy building phase. Last week we had 1365 as the most important level. And there it is right there. It hit it, and I said it either breaks or bounce that level. It bounced. So it bounced and stayed within the range instead of breaking and dropping. That's impressive. That's impressive. I mean, when you look at Nifty, when you look at Bank Nifty, when you look at some of these markets that are really getting crushed, during that same environment, Reliance is not. That's a store of value. That's impressive. You have to take note of stocks like that in this environment when everything else is hair on fire. This one is sitting there calm amidst it all. That's not bad. That's impressive. Now, it's still more sell side, but range bound and sell side. And this initial impulse move has kept prices in check. So, still building energy. 1365 is still the major level to watch for expansion. But this one might continue to be range bound. It's a really good store of value right now, building energy. It's impressive. It's had its opportunities to really break and drop, and it's been able to bounce back and hold every time. Not bad. And it's at value. It's at value as well. So here's VPOC, here's VWAP. When market's at value, there's really no edge. So you just have to be patient if you're looking for opportunities in this one. I would say if it did drop, it's another fade right back to value would probably be the best opportunity right now because this thing is resilient. Let's see what else we have here. Oh, yeah. So looking at Bitcoin and ETH, they started Sunday evening lower. So we have a gap down right here. Currently down about 2.87%. Look at the trap here. I last left you all last time around saying don't fall in love with anything above 75 unless it forcefully busts through 75. Remember? Just poking your head through 75 wasn't going to do it. It needed to forcefully push through 75. The other thing I mentioned was if you're going to break through 75,000, it needs to be an 8 to 10,000 point day. An 8 to 10,000 point day. And that day right there was not that. It was that day was 3,000 points, and then it really didn't fall back. So again, if you're gonna bust through 75K, it needs to be huge. It needs to be a big time day. My dog Coco agrees. She's looking for a walk right now, and she's all about the Bitcoin as well. It really, really needs to bust through, and that's why I have been very, very risk off, very bearish in crude oil. We've talked about each and every one of these traps along the way, especially ever since 127 here. Hey, Coco. We had the higher rejection at 125. We were bearish there. We were bearish here. Ever since that day, it's been risk off in a bearish stance. So it really needs to prove it. And that's what I've continued to say with Bitcoin. Now, that doesn't mean that it necessarily has to rotate down at the moment. It can continue to drag this out a bit more before it drops. But at the moment, it appears as though this is building energy to make another move that takes us somewhere into the 50,000 zone. 50,000 if it can't get through 75. And there is a scenario where I could see this getting as low as 32,000 down the road. I'm not going to say 32 just yet, but I mean, there is a scenario where it can get that low down the road, and I've talked about that as well. So I am very risk off on Bitcoin right now. I haven't even wanted to build a position just yet. Although when it hit 62.5 here, that was the first time we said, okay, now it's technically a potential double back to the recent highs. So technically speaking, 62.5 is the beginning of, say, accumulating a position for Bitcoin. But I'm very risk off. So that's the quick look at that one. Ethereum, I would say copy paste that similar analysis. This one has been able to get a bit higher into about 2,400, which is not bad. But it's still, again, a very highly risk off bet. This looks very similar to the structure we've already seen before. We've seen major rotations since then. This one, I could see dropping to 1,400 again, which is what it did last year, and maybe getting below it. 1,400 to 1,200, or maybe even all the way to 1,000. So that's why especially in our trading room, I've been very, very adamant about let's be patient about finding the low, because even after pulling back as much as we have already, 61%, if you were to get in here at 2,000 and it drops another to 1,000, I mean, you're cutting, that's another 50% haircut. So let it take a 50% haircut before you get into the trade, and then start to build your position for the rotation back up. So I'm still very, very bearish these right now. It's going to take a lot. These are the risk asset barometer right now, and they were the first to turn. And we were right on that in our trading room as well. I said, watch Ethereum and watch Bitcoin. I think they're going to be the first to give us highs, and they did. I mean, if you go back to Ethereum, this high is August of last year. August of last year it put in the high. This is nothing new. We called the high last year as it put it in, and we've been bearish ever since. So I'm sticking to that right now. One more good flush, and it might be the all clear. So some thoughts right there on Ethereum. And we'll do a couple of more here. NLC India. And I'll finish with gold. So NLC India, really, really great trading range action here. I like this trading range behavior. I want to look at this with the quarterly bands. This is great trading range behavior. This is great for scalping, or not scalping, rather, swing trading the edges. So fade the edges. You have 240 down here to 235 and your S3 here. You look up here to 275, 270. So that 5-point range here and here. And you're looking to just fade it back and forth. Now, ideally, maybe you get a volume profile where the volume profile here and your VPOC is right in the center, which is kind of there. So if you're fading this edge, you're kind of close to value. If you're buying here and fading, it's a much better opportunity to fade it back up the way, like here, up, much faster to get there. So this is a good fade the edges right now, building some energy. And when it gets into this phase, it can stay in that phase for quite a while until it's ready to see expansion. So really well-defined edges for that one. And we'll finish with gold. And we'll do GC here. This one has surprised me a lot, but it also doesn't surprise me. It's kind of twofold here. We talked about 5,000 being the big time level. 5,000's big. Everything's been trending up, so we're gonna move 500 points. Is it gonna be 5,000 to 55? I thought so, but I said if it breaks 55,000, then we have a shot to go to 45. There it is. It broke it. It didn't want to get off the level. Back-to-back doji days sitting on the level, and then look at that drop. That was this is a Monday, Tuesday, and this is Fed Day, last Wednesday for the U.S. markets, and then Thursday, Friday sell-off, and then here we are opening up ahead of the start of the week. So this is very aggressive, and it drops us back to the 4,500 level and tests the key range low. So, like the Nifty 50, Sensex, Bank, Nifty, all of them have this similar style impulse move, right? That big jolting 2 or 3 day move that created the key range. This one did it too. And now it's testing the low. Whenever you have a massive key range of this magnitude, the edges matter a lot. It's this key range is like it has the massive gravity to it, and it's going to keep prices within the orbit of that gravitational mass there until proven otherwise. So this is going to be very difficult, in my opinion, for gold to break down out of this range. But if it does, the level here is going to be that 44.25. 44.25, or really call it 4,500. If it's not able to rally back above 4,500 here pretty soon, then we might be looking at a further failure. So heading into the week, I would say a recovery of 4,500, and you have a little bit of a relief rally that can take you back up the way, maybe back to 47, 4,800. That's what I'll be looking for gold heading in this week. Can we get a trap in reverse here back up? Because we are at the key range low. I would not be trying to sell into something this week otherwise, but because we are at a major edge, because we've dropped tremendously into that edge and we hit a market structure level, those are a lot of good confluence levels to watch for a fade. But if it fails there, watch out, because now we're dropping pretty significantly. So the level to watch, 4,500 and the key range low in this instance. All right, well, I am going to go ahead and call it a live stream for today. Thank you very much for joining me here for today's pre-market stream. Again, this was a nice long one here. A lot of fun. Thank you very much for joining me, and let me know in future live streams which tickers you'd like me to take a look at. We'll do this again more this week. I was off on holiday this past week, so we'll do many more here as we move forward. But thanks a lot, and we'll see you soon. Take care.